on paper than the United States. If your policy is not up to scratch, actually, you could make matters even worse. And I think this is the weakness, the Achilles heel of the euro at this moment.
And where would support be for the euro right now? We're at 136.53 on the dollar. Where would you see the next support level?
You know, given the weakness that we've seen on the euro crosses, in a way, support is not.
It's hard to see. There is no clear support.
I would say, you know, you're looking at big levels such as 133, 132, and so forth. Because what we have seen in the euro is when it slides, it really does slide. I mean, last week we had a 4% loss in the euro, which I think is its biggest weekly loss in history since the inception in 1999. So in that regard, you know, we are in uncharted waters. One would have thought after such substantial moves, you get a stabilization in the currency, if positions are cleared out and everybody's too short. But again, people are chasing expectations. The one thing to be said, obviously, is the risk of policy surprise. We have, obviously, the World Bank, IMF, and G7 meetings coming up. We have 11 central bank meetings this week. And I think, yes, there'll be a tendency for central banks to surprise the markets and cut by more or ease by more and to facilitate or to offset the pressure. But again, it all has a sense of being too little too late at this stage. Speaking
of central bank meetings, FOMC doesn't meet till the end of the month, but given the payroll numbers that we got on Friday, much worse than expected, could we see an inter-meeting rate cut?
That could be a risk that we do see. I mean, our house view is obviously that we get a cut by the end of the month, but I think, again, given how everything is so open, the other issue as well is that, you know, with the banking situation, there's an issue of capital and capital injection. So yes, the TARP plan does help in terms of shoring up stability, but we still have an issue of underlying capital. One line of positive reasoning, I would say, is that we do have the bank sector off the lows of July 15th. So the banking sector has done okay, despite all the gloom that has materialized. But really the concern is in the real underlying economy that has almost day by day now started to come up as an underlying issue, and that may force the hand of the Fed to act more prematurely. And as we see that becoming a bigger and bigger fear in the markets, that would also undermine the case for some of the Asian currencies as well? Yes, certainly. We're seeing weakness in the Asian currencies quite clearly this morning. Sing dollar, Korean won, wherever you look. Key level on our Asian currency index, ADXY, is broken below 108. So I think for the next month or two, we will get more weakness in Asian currencies. Okay. Claudio, thank you so much for joining us this Monday morning. Thank you. Always difficult on Monday to... There's a lot going on. With all the weekends, exactly. Thank you again. Pleasure. Claudio Perron, their head of Forex Research Asia at JP Morgan, joining us here. All right, coming up next, China's once booming property market may be in for a bit of a cooling period now. We'll talk about that and what to expect when we come back.
Wolf 721, left intercept the final bearing 222. 730.
Information. What if it could find you right when you needed it? Before the board meeting, insight. Before the operation, a second opinion. Before the people who matter make the decisions that matter, they need knowledge. Information that's vetted by experts, analyzed and filtered by the smartest software on earth. Before the deposition, a case history. Before the merger, certainty. Before action, knowledge. Thomson Reuters, knowledge to act.
CNBC is proud to bring the 7th Annual Asia Business Leaders Awards to the dynamic city of Bangkok, Thailand. A prestigious event celebrating Asia's remarkable business leaders, recognizing their spirit of achievement and excellence. Join us as we honor top business leaders and their contribution to sustainable growth and profitability in the economy. For more information, log on to this website now. Jointly brought to you by CNBC and Thai IOD. Main sponsor, Thailand Convention and Exhibition Bureau. Associate sponsor, PTT Group. The following event sponsors and the following partners.
Let's take a look at some of the news in Europe.
The momentum to the upside here in Asian trading.
Capital Connection, the bridge between Asia and Europe.
So that's a very positive picture here in Australia.
We do have plenty of corporate news flow.
Live from 2 continents.
Very stock specific, today's move.
Fears of stagflation in the US, but also in France.
The Kospi is the standout winner today.
I think we can expect another wonderful day.
Capital Connection, keeping you ahead of the game. Weekdays at 12, only on CNBC.
Well, shares of the Chinese property developers today are all trading lower in China. Vanke, though, has just turned flat here. Shimao Property said it recorded 1 billion Chinese yuan worth of sales in the Golden Week holiday that just passed, and said it is on track to meet its full-year sales target. Most of the projects were located in China's second and third tier cities, which have been relatively stable. It's a different story, though, in the country's biggest cities, where the once red-hot property market has seen price declines. Peter Churchouse is property director at Lim Advisors and joins us now from Hong Kong. Peter, would it be fair to say that the housing bubble that some people had expected or that some people said was the case in China, is now burst well and true?
Very much so, well and truly burst, and certainly in markets like Shenzhen, Guangzhou, and the southern part of China, we're expecting to see more of the same in cities like Beijing, even some of the western cities, which have held up pretty well. But definitely the bubble has burst. Property sales are down very, very dramatically in terms of volumes, and pricing is off as much as 30 to 40% in some places.
Have the markets priced in that in terms of earnings expectations for these Chinese developers?
Well, the stocks are down anything up to 60–70% so far year to date. However, I don't think analysts and investors have really factored in the downside risk to earnings. At the halfway mark through the first half of this year, property developers in China had only achieved between 20 and 30% of their targeted sales for the year. So most of the developers have been scrambling to downgrade their sales targets for this year and also for next year. We've seen analysts downgrading earnings forecasts for both years as well. I think they have not yet downgraded it enough. I think the earnings are going to disappoint very, very significantly on the downside in the China property space this year and possibly even next.
You know, we've also been hearing anecdotal evidence of some property developers selling units at below cost just to clear them off their books as well. What kind of impact is that going to have as we see these companies grappling with what I'm sure to be a much lower demand picture, but yet costs on one side also rising as well?
Absolutely. Costs have risen for most developers, not just in China, but around the region, anything up to 20–25% over the last 18 months or so. Steel prices in particular, cement prices, labor costs have gone up in China. So yes, a very, very significant increase there, but prices are coming down in terms of the product that they're selling. Also, bear in mind, a lot of these companies have significant debt on their balance sheets as well. So they're very concerned about having to repay those loans. They're having trouble rolling over to get new loans to pay for land that they've already committed to acquire and for construction. So some of these companies are in a bit of a jam right now.
Do you think we're going to see any policy measures from the government to try and boost the property sector?
I think certainly. We've seen, obviously, in the last 2 years, very significant austerity programs to slow the market down. Well, that's actually happening. Those austerity programs have worked. But we are seeing around the countryside now, many of the cities are reversing those austerity programs that they put in place over the last couple of years. Cities such as Tianjin, Nanjing, Guangzhou, Shenzhen are actually rolling back some of those programs that they put in place. So that I think, is going to then shift perhaps at the national level, where we'll see also programs to roll back some of these control measures. For example, easing credit conditions, cutting interest rates, lowering the reserve requirements for the banks, and so on.
Okay, Peter, thank you so much for joining us today. We appreciate it. Peter Churchouse is property director at Lim Advisors, joining us there live from Hong Kong. Don't forget, you can also get the latest business headlines on CNBC's new mobile news service that is specially tailored for your phone. All you have to do is enter asia.cnbc.com on your cell phone, and you'll be up to speed with the latest market moving stories. We've got lots more coming up in the second hour of CNBC's Cash Flow, including continuing to track the markets in China.